right, good morning, everybody. Looks like I got it recording. It's Tuesday, July 17th, 2018. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Throw your diamonds in the sky. Cool. Do these sessions Monday through Friday with the overriding goal of helping you put together trade plans. And I want you to be an independent trader. I don't want you to listen to me, per se. I don't want you to listen to anybody. I want you to have the skills and the tenacity to do your own work and come up with your own opinions, because the world needs a hero, and it might as well be you. So please visit TradersWay.com, open a trading account, and allow us to earn your loyalty and respect. And you show that by opening an account. Let's fall in love, baby. All right, you guys want to do some technical analysis? It's been a while. I've been at Harvard for, what, almost a month? Holy smokes, is that difficult. Yeah. Holy smokes, was that difficult. Yeah. Crazy. Holy smokes, was that difficult. I still have 2 papers I need to write. One is on Islamic capital markets, and specifically I'm doing one on Sukuk, chartered Islamic bonds, and I'm doing a business plan for a startup. So anyways, without further ado, let's just jump right in. For some reason, I got Aussie yen here. Maybe it was the last thing we did 3.5 weeks ago. Very cool. You can see this is a daily chart. So we might have been about here a month ago. Looks like June, yeah, somewhere in here. And I said, hey, why don't we throw a line up here for some reason and call that resistance? Why don't we throw a line down here for some reason and call that support? And in the in those 3.5, 4 weeks, it went from resistance to support, and then from support on the way back to resistance. Cool. So looks like a couple of things. We identified support and resistance properly, but also, and this is sort of the true alpha, we expected consolidation. And that would have to do with seasonality. The time of year suggested, yeah, we want it to go up, but it's too early. It's probably going to go down, but it's not going to go down forever, so on and so forth. So it's kind of interesting where it fell for 2 weeks and then has been up for 2 weeks. Very cool, right? And again, the idea is kind of expecting something like that would be the alpha there. Zoom out a little bit, you can kind of get an idea. Down, 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 up, 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 up. Now, what if you had a preset bias? You can do that in the summer. The difficulty with having a preset bias is very often you could be wrong, or more likely you can be 3-4 weeks early. But nonetheless, is it possible, or even likely, you could say, yeah, I think this is going to move sideways, but I'm a bull on Aussie yen. Is that within the realm of reason? Okay. Well, not only within the realm of reason, the realm of should. You should have a bias, right? I remember talking for weeks and weeks and weeks about this very idea that you have a bias, right? I have a team of people now working on trading with a bias. the bias that I set. Well, actually, technically they set it, but trading with the bias nonetheless, because life's too complicated to be figuring out what it all means. What if it means nothing, right? What if there is no meaning? You know, what you're supposed to do is sort of bring meaning to the madness, right? So you're like, well, I don't know if it's going up or down, but I buy its support. That would be a bullish bias, right? You get what I mean? So anyways, a swing trader with a bias, let me see if I can get my drawing tool going. How cool. Using drawing tools again? Crazy. Right? Anyone that's taken the swing trading course, and I know many of you signed up for the summer school course. So again, I hope you're enjoying that sort of intellectual growth and maybe a new lens that you look at the charts with. But nonetheless, that's a buy if you happen to be pre-installed with a bullish bias. Okay. There's lots of things going on here. And then for some reason, and we did this a month ago, right? Like we saw something to the left that said that would be support. And then we see support, 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 support. And then the magic happens. The month of July, or as they say in Georgia, July, opens up with an M2. It doesn't get more perfect than that, does it? I mean, this is a nearly perfect bullish entry. And then again, you'll challenge me and you'll say, well, Wayne, well, how did you know, or how would you know? You're so smart, Wayne, that, you know, now that it's happened, it's hindsight, now you're brilliant. I'm like, well, it's not supposed to be hindsight, it's supposed to be foresight, right? And again, so we talked about it here before I left for school and said, well, for some reason, this is support. For some reason, you know, this is obviously support. Right? So that's the foresight where you're like, well, if it does drop down here and I am a bull, I should be looking for bullish opportunities go long. And then you throw in the monthly, which didn't happen. It didn't exist when we were up here. All of a sudden gave you a perfect launch pad. And you're like, oh, well, I happen to have a rocket ship. You have a launch pad. Let's shoot for the stars, right? And that's a trade plan. Yeah, so now the bears might have a go, right? But the problem with that is it's too early. Doesn't mean they won't do it, but I think it's too early. Because I see the resistance, and again, we did this back in the second week of June. Now we're in the third week of July, but it still exists, right? Most of the big resistance is up here, which is an R1, right? An MR1, which is interesting because maybe we head up, right? And then we close high, which means that this pivot here needs to move a bit higher, maybe where we are now, right? And we end up in August doing something more like a breakout type strategy, right? So to do that, we got to head up, hit resistance. Well, if you see resistance there, you should assume it's going to hold because we're not trending up. So you see the resistance. It's a matter of fact, like, oh yeah, we're going to respect that. But if we're going to break, then why not sort of do something like that, right? And so now maybe, again, that's the foresight for next month. Maybe something like that would happen. And we would use this sort of secondary level of resistance as next month's support. We don't know if that's going to happen. It's just a hypothesis, right? But it's important to have that now. And I would like this to break out, but it might take a whole month, right? The third week of August. But here's the thing. Nobody actually knows when it's going to break. I don't know when it's going to break. You don't know when it's going to break. It could be July. It could be the first week or second week of August. But the thing is, in my, I'm 172 years old. I don't know if you know that. So in my 150 years of trading experience, usually it doesn't happen till the end of August, even middle of September, right? That's a big window, right? But sometimes it goes early. So you could have bought it back here. So that's the thing. If you are a bull, you're constantly buying at support, constantly waiting for breakouts, because one of these is eventually going to break out if you're a bull. It could be in July, it could be in August, it could be in September. If there's a presidential election, it could be October. Clear as mud, right? Yeah, well, that's why I'm here to help. And collect a positive swap, sure. Yeah, it's not going to be a lot, but with leverage it helps, right? So even if your swap is 2%, leverage 50 to 1, it's 100% a year. Leveraged 100 to 1, it's 200, right? 200% a year. So that eventually that adds up, Amy. All right. All right. How about that oil, huh? Check that out. Interesting, huh? Look at all the things that we've drawn here. You have a plan like this. Okay, you can see previous we had it coming up, and then we expected a decline, so we got the decline we expected. And it looks like we have this fib, came down. Check out this fib, guys. Came down and hit the 618 retracement from this side. It retraced 62%. Actually, it didn't retrace 62%, 61.8% within a penny. Cool. Didn't make the breakout, but shows you the importance of resistance, huh? And there's a lot going on here fundamentally that would again sort of create opportunity more than technical analysis. So this is a technical analysis thing, right? The market, the people involved in the market let this fall to 61.8%. And then they said, well, I'm a bull and that's where I buy, right? Which is okay. That's the humanity behind these charts. Buyers say, okay, we have a 61.8% retracement from the high. That's where I buy. It's such a great deal. Okay, you were shopping foil anyways, and you're like, you know what? It's on sale. It's my price. I gotta buy it. Right? Great. The top here is fundamental. Right? The top here is fundamental, and that has to do with supply and demand and OPEC and non-OPEC countries talking about producing more oil. That's the Baker Hughes rig count saying that they're building more rigs. It's a lot of things, right? It's a lot of things in here, but it's not necessarily price. It's much more fundamental to bring it back down. So now it declines. Cool. It's very nice, though, that this happens to be the pivot I teach for bears to sell at. right? And that's comes virtue of the courses, that there might have been a time when you didn't have this little line in the sand here, and you might have just aggressively bought because you were a bull and it went up for days and days and days and weeks. It went straight up. The velocity was incredible. So you're like, oh my God, this is a breakout. It's going to up forever. And then but if you know your pivots, all of a sudden you're like, oh, that's the one pivot that bears are going to short. That's the one they've been waiting for. Right? There's a difference, isn't it? Was there a time when you would have assumed in this scenario, after this kind of move, so hard, so fast, was there a time when you would have just assumed to buy the dip here? And probably because of the velocity, right, Chuck? You're like, this thing is cooking. Yeah, role reversal. Sure. Yeah, you would have treated it like a breakout. Yeah, well, the price action too, the interesting thing is you do want higher highs and higher lows, but you don't want them too fast. And then a small three-wave correction, and then off you go again. Um, the high velocity trades are the most difficult because they collapse just as fast because it's too much for the market. You don't want fast. You want slow and steady, right? Slow and steady, steady and slow. So anyway, it's kind of interesting that it's come down. And now where are we? Well, I'd almost treat this like a range, right? So I'd kind of like start looking for a bottom. I'd mark this up like a top, right? And just say sideways for a while, right? I'd kind of assume this kind of nonsense. The way I look at this is, I look at this as a macroeconomist. Will the global economy be productive in the second half of 2018? I think the answer to that is yes. Okay, especially once summer is over. So if you do believe macroeconomics will be positive in the second half of the year, then the theory is you're a demand side buyer, and your risk is supply side, right? That the producers of oil overproduce. But it's going to be very difficult to overproduce if demand is increasing, right? So to illustrate that, we can go. I should use black. Okay, and we'll make this one red. What curve is that? Supply or demand? Okay? When quantity is low, price is high, therefore demand. That's why it's downward sloping. If there's very little of something, the price is high. If there's lots of something, right, which means if there's 7 of something, price is going to be low. If there's only 2 of something, price will be high as long as there's demand, right? Okay. And then this is supply. All right. So the theory is if you're demand side macro buyer, you're saying to yourself, I believe the Chinese economy will be humming along because the American economy is doing well, and they'll be buying stuff from China, so the factors in China will be doing well, and energy or demand for energy around the world will be high because macroeconomics should be good. So that means you expect demand to increase. Okay? You're a demand side buyer, so it goes from demand 1 now to demand 2. Okay? So you're expecting demand to go from 5 to all the way up to 7. Okay? Which means the equilibrium price at price 1 is now shifted to the equilibrium price at price 2. Okay? And the better the macroeconomic are, the higher the demand in this case for oil should be, right? See what I mean? So if you expect macroeconomics to improve or just be good, whatever that means, in the second half of 2018, you would expect demand to increase for oil and therefore oil prices to go up, right? The demand for the oil comes from just more productivity, factories humming at near capacity, more people with jobs, so they're driving to work, more business people going on trips, to do business, and more trains, planes, and automobiles kind of stuff. More factories, and more of this and more of that. Just more demand. Okay. And interesting enough, if supply is near 100% or at 100%, can the world just simply produce more oil and just say, oh, no problem, we'll just produce more? And if you produce more, you could bring this price back down because supply will increase again, right? Right? So if you increase supply over here, the equilibrium price would go back to 5, but you'd have more oil. Well, if you're at 100%, you just can't produce more oil. You're already producing max, right? So Saudi Arabia used to be called the swing state because it would produce at 60% production. And if the United States went offline, or Iran went offline, or the Russians went offline, Saudi Arabia would just say, oh, no problem, more oil, right? And they just turn a little switch, turn a valve, and more oil would be produced, and it didn't matter, and oil prices would stay steady. Well, right now, Saudi Arabia is at or near 100%, so they can't do it. The United States is now the swing state, and from fracking, right? So anyways, you can make a decision right here, right now. You do your analysis, and you say, I believe macro, and by macro, I mean global, right? I believe global economics will be reasonably good, or even just like not bad, then you'd be a buyer of oil. If you thought in the second half of the year things were going to be bad, right? Bad, like the economy in the United States is going to slow down, the economy in Europe slow down, therefore, those 800 million people, 900 million people are not going to buy stuff less, so the Chinese economy is going to be bad. And if they're not producing stuff, then there'll be low demand for natural resources, right? So Australia and Canada and Brazil start to hurt, so on and so forth. Then you would, if you thought that was going to be the case, then you would probably sell oil. And that's really the analysis that needs to be done. Once you've decided whether you're a buyer on positive macroeconomics or a seller on negative macroeconomics, then you just go ahead and do that. Rob says low steel and coal production. Well, the problem with that is China produces steel for the sake of simply producing steel. It's sort of like the government buying airplanes from Boeing simply to keep Boeing employees employed. China produces steel simply to keep steel workers employed because it employs millions and millions of people. So they're flooding the market with steel. They're stockpiling steel. So it may not be the bellwether or the canary in the coal mine that you're suggesting. Logically, that makes sense. But that if China's artificially producing steel, then it wouldn't be a great bellwether. Well, yeah. So if you do see demand for iron ore and coal, right? In this case, like Australian iron ore and Australian clean coal, maybe you could use that in your analysis and say, oh, because of these things, I believe X, right? It just doesn't necessarily have to be true, but I would do it that way. Yeah. So sure, just be open-minded at the same time, right? All right. But yeah, that makes sense. Just be my other thought on that is it could be the Chinese government artificially, impacting their employment, right? So you see it, it doesn't mean things are good. So be careful with steel as your bellwether, is all I'm saying, because that is the thing that that can be used to manipulate employment. You're welcome. That's me, my body thanking coffee. All right. All right. That's where bulls would buy. That's where bears would sell. And I don't know nothing about anything. That's that. So I would mark this as a sideways. I would mark this as an up. Oops. I'd mark this as an up. Okay. That's how I would look at that. So let's put it there. Okay. Then I got to mark that. Ciao. La, 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 la. Guess you can mark one here. Ciao. Let me get in there a little more, zoom in. All right. So it opened in a weekly buy zone. It's falling in a weekly sell zone. It's one of these things like you should just be doing what your bias is. If you're looking at this and trying to make decisions, it's probably not working out very well. And I have to reinforce the idea that your charts don't have your decisions made, right? Or your charts don't make decisions for you. So if you're like, well, what am I supposed to do here? Am I supposed to, what does this mean? It doesn't mean anything. You're not supposed to do anything except make your decisions off the chart and then carry out your trade plan on the chart. So if you're bullish, it opened in a bullish zone, okay? And you could have bought it, and now it's selling in a sell zone, but it wouldn't have told you that ahead of time. There's nothing really on this chart that says this is where you should be selling, except this here, okay? That's the one line where if you were a bear, you should sell. But there's nothing on here that's really, truly, clearly says you must be a bear. So that's where you're looking at your charts trying to make a decision here, and that's where your mistake is. Okay? Yeah, that's not, I thought that might be worked out. So once again, the answers are not on the chart. What I was thinking is, if you were a bear and it sold off of here, and you're treating this more as a big range, even the lower high might have been an opportunity, but it doesn't fib out. So it's not really a fib retracement. And it's not really this roll reversal here. It's a little bit off of this, I suppose, is the best explanation. But even then, it doesn't, there's nothing that would have said, oh, there's no way it's not going to go up here. Well, it totally could have. So it wouldn't have been an obvious sell, except that thin little line that says M3. And if you were a bear before anything here, you were a bear yesterday, last week, last month, then that is the thing that says, oh, well, you should take a shot here. Right? And then again, maybe way up here at R1. And then maybe again way up here. And those are trade plans, right? Where you say, okay, I don't know if this is still bearish or not, but I have 3 opportunities to sell. One at this price, one at this price, and really what you want is higher up. You kind of want in this area. Right? That's the way you're supposed to be trading, right? You've identified 3 levels of resistance in which you would sell because you are bearish. You're not bearish because of any of the stuff that we're looking at. You're bearish because you don't like the euro or you love the dollar, based on your analysis, right? I hope you haven't fallen off of that methodology. Okay. No, I don't want to go into the exotics today. So, sorry, Bear. Here's last week's sell zone. This week's sell zone. Yeah. Sorry, bro. Let's just tiptoe into the water, huh? Yeah, it's partly Barry because I'm just not caught up on, Turkey. Right? So for example, this area here on Sunday/Monday is the buy zone. Your target is up here. You see how you could have front run that on Friday? That was something that I taught people in the last swing trading groups how to front run. And this is your front run price right here. What else do you see and observe? right? That is the buy for the month of July. And it went up and hit the sell for the month of July. Both have been respected. So once again, like, put it this way, let's just break this down and digest it a little bit. This is basically the last day of June, and we're at the July buy price. Is it possible you could front run it a day ahead of time and buy it at or near this price here? In this case, or even on the, looks like the first or second day, it would have been, right? Okay. Nobody thinks that, just broke? No one else thinks that that's plausible or likely? Yeah, but I mean, well, I taught you, right, Brooke? I mean, there isn't much else. Okay, thank you. Charles says, yes, absolutely, right? Yeah, but I mean, by definition, that's what you're looking for, and it came down to the exact pip, right? My point here is if you had just done that basic entry, and to catch that basic entry, you had to already be a bull. Or you just noticed it's really a bull thing and you threw down a trade and hoped. That's your call. But if you were a bull already, then it's an absolute no-brainer. What you don't know is if it's going to, head up and hit your target. Well, in this case, all it did was get to the sell zone, but you would have made money, right? What is that, 116? It's only 150 pips, but right? And then if bears could have slowly set this up and said, oh, it's showing signs of weakness off the sell zone, right? So it went 150 pips up and 100 pips down. If you had already been a bear and you used your monthly pivots and took an obvious, simpleton trade, you had an opportunity, once again, to make money. Neither person has been right yet, right? That's the thing. Neither side has been proven right yet. We don't know if the bulls are right. We don't know if the bears are right. But if you had simply been a bull or a bear, you would have made money. It didn't matter which. What if you're not a bull or a bear? Then you're a pig. Thank you, Martin. What happens to pigs? Yeah, pigs get slaughtered. Very true. Yeah, I hope you guys have missed our time together every day. I missed you guys. Right on. So yeah, if you're not a bull or a bear, you're a pig, and pigs get slaughtered. I hope one day, maybe even soon, like let's say you have no idea how to make a fundamental decision. You have no idea of seasonality. You know nothing about nothing off chart. So if you're just like on a chart person, that you either guess or you flip a coin. But you should make a decision today or this week. Have a couple of cigars, a couple of scotches. By the way, I had the Pappy Van Winkle 25. It might have been a 28. I'm going to say 25. Nice if you like your bourbon. Anyways, yeah, well, just to find it, I'm like, no, you got the 18. And he's like, no, it's a 25. I'm like, you don't have it. You have the 18. It's misprinted on the menu. So he goes and gets it. I'm like, you have the 25? anyways, you make a decision, you flip a coin, you flip a cat, whatever you flip that. The cat lands on its feet and you're a bull. Okay? But you make that decision now per currency. So you say, like, you flip a cat, lands on its feet, you're a bull on the US dollar. Then you flip a cat again, oh, bull. Okay? Well, unfortunately, a cat's always going to land on its feet. But you make some sort of decisions, especially for the US dollar. No, Rob, I don't believe that. There's no way, Rob. The Crown Plaza in Knoxville? No way! That can't be true. Crazy, there's no way. Nuts. The Crown Plaza. All right. All right, it's amazing. That blows me away. So, like, what kind of person rolls into the Crown and says, yeah, give me a $150 glass of bourbon? Yeah, there you go, a shot. That's funny. Well, you know, the owner probably had the scam, huh? Where it has to sit on the shelf for a certain amount of time, then it can depreciate or something. Then he just takes it home to his home bar or something. That's funny. Anyways, you make a decision, right, guys? This is what I'm trying to get at. You need to make a decision. You need to make it this week. And you need to say, like, I'm going to buy the Japanese yen every single day for the, or I'm only going to buy the Japanese yen between now and December 31st. Or you only sell the Japanese yen between now and December 31st. But we're at this point where you need to make a decision, because we don't know when seasonality takes hold. It could be today, it could have been last week, it could be next month. Okay? There's lots of variables. I can't pretend that I know when the turning point is. I usually get pretty heightened readiness around the third week of August, but it could be right now. So we may be early, but it doesn't matter. Make the decision. You're either a buyer of yen, seller of yen. Buyer of dollar, seller of dollar. Buyer of Swiss franc, seller of Swiss franc. Whatever. Because then you know, like, let's say yen pairs, right, on Japanese yen. If you're a bear on Japanese yen, now you know direction on every pair with a yen on it. Yeah, all right. I know this guy then, Rob. I've never met him, but I know him. He and I are friends. Yeah, he's got it, man. The Crown freaking Plaza, though. That's funny. Knoxville, center of the universe. Okay, but so now you know whether you're a bull or a bear on many, many, many different pairs, which means by definition you're not a pig. And if you know pigs get slaughtered, then the first thing you need to do if you were a pig, right, is put on put horns on, right? They're like, it looks like a pig, but it's got horns. You're like, no, that's a bull, right? I mean, if you knew you were a pig and they're walking you to the slaughterhouse, you'd at least put on a disguise, right? You're like, I don't know what this guy's talking about anymore. Well, neither do I. Don't be a pig. Be a bull or be a bear. And the other thing I want to make sure is clear. You don't like say, should I be a bull on the pound yen? And then should I be a bear on euro yen? No, 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 no. All yen pairs up or all yen pairs down. Write it down. Put it on paper. If you follow my book, I actually tell you to use a felt tip permanent marker. The stinkier, the better. Because I want you to see it. So when you put it on paper, I want you to use the part of your brain that knows language and letters, so you got to use a different part of the brain. There's this emotional side of the brain that says if you write it on paper, it's essentially a contract. It's legally binding. So that goes into a different part of your brain. I want you to smell it. The olfactory senses of your brain may not be here, like where your eyes are. It might be over here. That's where the smells go. So I want you to file it here visually, here, right? Olfactory sense. Back here where it's emotional, where your fear and joy lives, you know, way back in here. And you want to plant it all over your brain. And then I want you to proudly tell all your friends and family when they say, hey, so how's that Forex thing going? I am shorting the Japanese yen market. And they're like, what? Yeah, well, it has to do with this, this, and this, right? And what happens is you kind of train yourself. And over time, you will actually, the physical shape of your brain, your synapses will rewire themselves, and you can even change the chemistry of your brain. There's like adrenaline, and then what's the opposite of adrenaline? What's the chemical that makes you worry? It's anti-adrenaline. Does anyone know what it is? Anyways, you can change the amount that your body produces. It's not lactic acid. Cortisol. Maybe cortisol. That might be it. So let's say it's cortisol. Yeah, that's where stress comes from. Okay? Well, so if you're stressed when you're trading, for example, it comes from your uncertainty. And your brain says, ooh, this is uncertain here. I should reduce my adrenaline level and increase my cortisol level. And now it should say, you should feel uneasy, right? You even feel it in your stomach, right? You're like, I don't feel good about this. Okay? How do you change that, guys? How do you actually change the chemistry of your brain that says, I don't know what's going on here, I don't feel confident, I might lose money, my family might laugh at me because they think I'm a gambler, right? How do you change that uncertainty and actually change the chemistry of your brain from not enough adrenaline to too much cortisol? How do you do that? Experience? No. That goes back to the golfer that golfs every day for 10 years and still sucks. Change your thoughts. Thank you. Change your thoughts to what? Bias. Make a decision. Now there's certainty. Do you understand how important this is? Now there's certainty. Now, you still might be wrong, but you know what you're doing. You're clear on what you're doing. You know the levels of support in which you will buy. And you have control over that. In fact, you don't have control. Like, it's going up today, and I should have been buying, and then it's going down next week. Oh, I should have been selling. Why didn't I know that? And it's so complicated. I have no control. I have no confidence, and I have way too much cortisol. You do it the opposite. You take total control, and the market either giveth or it doesn't. But you know what you're doing, and you can plan ahead, and you can pick your prices, you can pick your line. And what happens is you start to gain confidence. You don't know what the market's going to do, but you know what you're going to do. And then if you're right on top of that, in September, if the yen pairs are all going up and you've been buying at support, all of a sudden, the amount of cortisol goes down and the amount of adrenaline goes up, or sorry, it's not adrenaline, is it? It's testosterone, I think it is actually. It's not adrenaline, it's testosterone. Anyway, so the testosterone in your brain goes up because it's confidence, right? Maybe dopamine? I think dopamine is different. That comes from pleasure. Like, this is not a pleasure thing. This is you know, this is, yeah, dopamine's a quick thing. So I think it's more testosterone. Sorry. That's your confidence in your ability to combat and reproduce. And, you know, this is your strength kind of thing. This is your power pose kind of thing, right? So it's not dopamine. It's a longer, um, it's a longer term sort of chemistry of your brain. And endorphin? Okay, well, if you're going to challenge on me, like, you know. But anyways, I'm trying to say it's not a short-term thing. It's not a trick. You're changing the chemistry of your brain. You're changing the physiological shape of your brain. You have a different brain. You can actually do that. But it's difficult to make yourself change. But once you do it, so this is why you fight me every single day. I'm like, just have a bias, just trade in your direction. You're like, Wayne, I hear you. I totally get it. I'm not going to do it. Right? Oh, well, if you Google it, it has to be right. So anyways, you know, the hard part is to make the decision and then stick to it over long periods of time and tell yourself, I'm actually rewiring my brain, changing the shape of my brain, and I'm changing the chemistry of my body. But if you get that right, you're surviving 10 years from now, right? Do you think you honestly can trade every single day worried and stressed out? Do you think you can make it to year 10 and stressed out all the time? No, you just can't, right? You physically cannot do it. Your chemistry is wrong. You're worried all the time. You're going to have ulcers and that kind of stuff, right? Yeah, maybe in early grade. So you have to, I hope this doesn't come across as, you know, hippie hocus pocus stuff, because look at me, I'm not a hippie. All right. So Rin says, so keep that bias for at least a month. I'd say like 6 months. Minimum 3. Okay. So Rin, what you can do is pay attention. So let's say it's minimum quarterly. Okay. So every 3 months for the next 4 years. Okay, Rin? Now, first of all, this means I want you to do whatever it takes to keep trading for minimum of 4 years. Do not blow your trading account up in the next 4 years, because you're just leaving your destiny on the table. Okay? Over the next 4 years, every 3 months, look back and see if there was a steady bias. So January, February, March, was there a steady bias? And if so, what was it? Right? April, May, June. Was there a bias? Was it consistent? July, August, September. Was there a bias you could have been at, and could you have traded it? And then you're right, October, November, December. And you do that over and over and over again, and then and try to look, were the trends 1 month, 3 months, 6 months? Like, how far could these biases have lasted? And you might see, like, it might be 3 months generally down, 3 months generally sideways, 6 months up, for example. And you say, well, I've seen this 3 years in a row. Will you believe it your 4th year? And you're not thinking, okay, what would Wayne do in this situation? You could say, this is what I've seen in the past. Okay, so that's my Shawshank to you. You know what that means, my Shawshank? There's a scene where the prisoner says to the other prisoner, you get on living and you get on dying. And he says, if you ever get out, go to this little town walk down this road until you see a stone fence. Follow the stone fence until you get to the oak tree. And under the oak tree, there are a bunch of stones. You look for the black, shiny black stone that looks like it has no business doing there. And underneath is a box. And in a box, I have a gift for you. And the next day, the first prisoner is gone. He escapes. And what he actually did was he gave a reason for the other prisoner to stay alive, because he had to stay alive to find what was in the box and not give up and die. It's amazing, right? So you got to get to year 4, Rin. So you could say, I have a very strong feeling based on my experience what will likely happen year 4. And that's where you want to get. What you don't want to get is maybe somehow survive for 4 years and still have no confidence. So tracking is going to give you the confidence and the true experience. You don't want to be the golfer that golfs on a regular basis for 10 years and still is a mediocre golfer. You know that's true. You know what happens. You don't want it to be you in trading. If you tried hard and focused what you do on a regular basis at golf, in 10 years you could be a really good golfer. Or without the focus and intention, and most important, it's the intention, in 10 years you could be a mediocre golfer. You'll just be 10 years older and probably down $25,000 in green fees, right? You'll say, oh, well, it was fun. Yeah, good. All right, anyways. I'm out of practice. I got to keep an eye on the time. All right. Too much hippie stuff, right? I'm sorry. Look at this, and there's nothing. And by the way, my that stuff doesn't come from New Age stuff. It comes from neuro-linguistic programming. So it's really not hippie stuff. Yeah, it makes sense. But here's the thing, right? Jean-Guy says it makes sense, but people don't do it. Almost everyone here, and potentially everyone, will just not do it. And there's something about the human spirit that you're like, yeah, it makes total sense. I ain't going to do it. Yeah, it could totally change my life and the life of my friends and family and everyone close to me. Yet I still won't do it. And it will help me find success to the point where I'll have to come up with new dreams because all my previous dreams will be easily achieved. But that's scary, so I'm going to self-sabotage and I'm going to find ways to not be successful. Or I'm going to find ways to whip out and not do the things I know that will make me successful. And it's amazing, right? And then I think about economics, where all of economic theory and models have to do with humans that make logical, intelligent decisions that are in their best interest. And then I think, I've never met someone that does that. Yet economic theory is based on the rational person. Like, who's rational? So anyways, this USD CAD, and it means nothing to me. So therefore it's dead. This is gobbledygoo, nothing. Maybe you could buy it here and hope it goes up, but on a monthly basis, it's gobbledygoo. You could have bought it here. I suppose this was yesterday. And yeah, And there's some hope. There's a lot of hope to it. Maybe you just do it simply because it was an opportunity. That's it. A bear could have sold it Friday. Friday would have been the best, actually, to sell it. Because again, for those I've taught how to front run, that was a clear front run, but I'm sure you found something better to do. Gold, there's nothing on a monthly basis. This is a buy zone on a basis. And if anything, you're playing it like a double bottom. So the next step now, if you're a bull, you can buy the double bottom, which is a bit of a bet. The next thing is a higher high, higher low type scenario. Or actually, let's do it differently. Okay? And that would be better. So that would be buying it near the end of the week, or you're buying it now and just getting lucky. Okay? And that's all you're doing is, right? But I like to fondly say that this strategy is based on picking bottoms, and that strategy often stinks. Okay. This is a frustrating one. I don't know if you've been trading it. This is a very clear buy, beginning of the month. Okay. This is a very clear sell. This is a very clear buy. And now, this is a weekly sell. I don't think you would be, how do I say this? If there isn't a clear trend, then you're trying to buy off the S1 and sell off the R1, right? So you're not necessarily confident on M3 in this scenario, but you do have something going on here. So it's plausible, but I'd have less confidence selling there. But you had an opportunity on Monday. Okay, and it looks good now. I'm not entirely sure if they're related, but buying this twice never feels good to me. Okay, this was supposed to go up, down, up, down, up. Okay, so for it to be completely resetting, and then even tightening up, like now you have to almost play it like this, right? It's tightening up. Some mixed news, whatever's happening here, opens us up to the downside. Okay, and you can see there's reason that you could think this is down. So the best trade, going back to the 4-hour here, right? Well, let's go back to the daily. Based on what you see here, is it more than reasonable to you to just simply be a bear on pound US dollar? This is the most important stuff. Get away from like the head and shoulders and all that nonsense. Get away from all of that. The hardest decision right now is, do you treat this as a bear or not? Right? Well, you don't have to be. You could see the bears are going to be challenged here. Oops, let me get rid of that. Right? There's no doubt bears are going to be challenged here. There's a lot of consolidation, right? We're talking about this whole area here. So with this being the low price, you know, from this price to that price, you know, it went from April 2017 to the end of the year. So, you know, we spent 9 months kind of in this price zone, and now we're here again. So it doesn't have to keep falling. But the question is, could you still be a bear? Okay. And let me zoom in. Use moving averages on this one. It is slowing down. There's a lot to it. But if you were a bear, this is the sell. Remember, this was a buy for bulls. This was also a buy for bulls. Okay? That's besides the point. If you were a bear last week, last month, and the month before that, and the month before that, right? You're simply a bear. This is your selling price. When it was rising, the whole time it was rising, you're thinking, I might sell here, I might sell here. Okay? Bearish engulfing candle, you follow that up with a Fibonacci retracement as well, right? So you could even sell here on the weekly M3 off of the monthly M3. All of these are bearish. And based on what you saw in this recent past here, you simply just sell at retracements. You sell at the M3, monthly and weekly. It's what you do. That's part of being a bear. You're not a pig. You're not a bull. You're a bear. Right? The other thing to notice, guys, this slow period, most of it is summer. Okay? Look what happened the third week of August last year. Okay? Look at this. A down July and up August, right? Generally speaking. So now that we're kicking off the daily 55, another part of your plan if you're a bull, 55 means double bottom. Okay? So what are you going to do if you have an opportunity in the next 10 days to buy off August M3? And your plan's going to look like that, right? Okay, we're kind of in this period right now. So, have your Pappy Van Winkle, a nice, juicy, leathery cigar, and you say, I want to think about what I've seen over the last 6 months in Forex, technically. I want to think about what's happened fundamentally over the last 6 months. And I want to make a decision on whether I should buy the US dollar or sell the US dollar, buy the Japanese yen or sell the Japanese yen. And once I've made a decision, I want to write it down. In the same way that I would explain it to a potential investor, to my hedge fund, I would say, my outlook on these two currencies are X, Y, and Z between now and the end of 2018. And then be that trader, be that hedge fund manager, be the expert you want to be. Okay? Is anyone willing to do that over the next few days? You start August an expert. And why do you do it? Because it'll help you be right? No. You could be wrong the whole 6 months. But at least you know the prices that you're buying or selling, they just don't work out. Charles says because it's his job? No, not really. Thank you, Mike's got it. Because it helps you rewire the synapses of your brain. It helps you change the chemistry. To reduce your cortisol or whatever it is. To literally change the way you think and the way you feel. Because if you don't, you cannot be a success. You're going to get ulcers. You're not going to be able to sleep at night. You're going to double guess yourself. You're going to self-sabotage. You know it's true. When you get to a certain level, as a trader, when you get to a certain level of your career and your growth, and even if you've never seen this directly, I'm sure you believe it, that there's something in our human psyche that creates self-sabotage. And you have to find a way around it. We fear to win, so we fail before we begin. And the way past that is literally changing the physical and chemical makeup of your brain. Oh, shoot, I'm supposed to teach you how to trade a stochastics and make $1 million quickly. Well, maybe we'll do that tomorrow. So again, thank you for being a client to TradersWay. Thank you for being on my team, and you always show me loyalty and respect. And you're good people. I'm very grateful to have you in my life. And I missed you while I've been gone, but I'm back. So let's don't call it a comeback, huh? We'll get some good work done. It's still middle of summer. This is where the weaklings fall asleep or complain or whine and cry because the market's not moving. I think some of our best work can be done during this period while everyone else, the 95% of people in the market, whine and cry. We're going to whoop them. Frank, I just got back to Earth. I've been locked up in Widener Library for 3-4 weeks, working day and night in school. I don't know nothing about anything. So, but we'll figure that out soon, okay? Okay? Yeah. Yeah, Abel says, yeah, next 3.5 weeks is European holiday. I'm in Zurich in August, and it's amazing. It's an absolute total ghost town. Amazing. I remember driving past entire buildings that just didn't have any lights on. There was nobody in Zurich. Crazy. Ghost town. But there's a lot of opportunity for us to sharpen our saws. So anyways, peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow morning. Take care, everybody. Sharp, sharp. Shay, shay.